That leads us to Danielle DeMarco. She's going to talk about the mortgage market. Danielle, if you want to come on, sorry for stealing your thunder about that little graph there. I know you have more detailed graphs when you do your presentation, but come on in.
I appreciate you stealing my thunder there, Tim. It's all good. One thing to note on that graph too is first-time homebuyers now, even with less than 20% down, are eligible for 30-year amortizations instead of just 25. So that actually makes the affordability even better and a lower income required as well to qualify for that first property if anyone's looking at their first home. So
And if
something
you look at that, I was using a 4.5% interest rate. You can probably get better than that.
a little
Uh,
bit, yeah.
yeah.
Little bit, yeah, yeah. So, yeah, okay. So I will adjust slightly what I'm chatting about. Some of what I'm going to chat about is kind of what you guys touched on and is a little bit similar. So I'll skip over some of that. What I wanted to kind of chat about is mortgage rate predictions for 2026, and this is where you guys had touched on this. So the Bank of Canada rate outlook, are we looking at any drastic drops or drastic increases? No, either way. The word for 2026 is kind of going to be stability. So rates should remain pretty stable. There's two of the major banks who are expecting a slight increase by the end of 2026. But for the most part, the rest of the banks are predicting a stable market with relatively no change. So that's good. A stable market is not a bad thing. It reduces some of the stress off of buyers to feel like, oh my gosh, we have to buy right now. Same thing, Tim, as Adam Carly mentioned, where having more choice in the market when it comes to property can be is a positive for this year. Also, knowing that rates are going to remain relatively stable is a positive for investors as well. So when we're combining, having some great prices right now, more selection right now, and stable rates, there's no need to be thinking in the mindset of, oh, I need to wait in case rates drop, because it's really likely not to happen. As Tim mentioned, we are lower than we were in the last 2 years. So just to give you guys some context, okay, so back to what we were talking about is, with rates remaining stable and prices remaining stable, it's giving you as investors a lot of really great options because we're not feeling super rushed, but we're also not waiting until the summer because we think rates are going to come down. And that's typically when prices tend to go up. So, like everyone mentioned, buying now, it can be a good time, and not panic about rates is really nice. As far as fixed rates go, we think those are also going to remain pretty stable, no drastic drops or increases. I think before I was distracted there, I was chatting about comparing to 2 years ago. So 2 years ago, rental interest rates were like 5.9-ish% in 2023. Just 2 years later, we're significantly lower than that as far as rental rates go. So it's still great rates, even though we're not in COVID rates, like Tim said. One of the things you guys also touched on that is going to play a big factor this year is the renewals. So 60% approximately of existing mortgages are coming up for renewal over last year and this year. That's the largest number of mortgages coming up for renewal in Canadian history. So there are going to be people who have the payment shock. Those of you that already have rentals that are coming up for renewal as well, don't panic. There are definitely ways to combat the higher rates, again, as compared with COVID rates. So we can refinance, we can take out equity to consolidate outside debts, we can extend amortizations out to keep your property cash flowing. So you don't necessarily have to panic. It's just a call to a mortgage broker to say, hey, what can I do with this property? What are my options? We just had a client the other day who was thinking of selling their rental, but ideally wanted to keep it. We did some math and could pull out equity and pay off some outside debt, including a car loan that had a $900 a month payment. Well, now all of a sudden we put that into the mortgage, and our outgoing total cash flow on, out of their pocket is significantly less. And now they're positive cash flowing again. So there's always options. So reach out and chat about them before you panic. Um, some client, the same way you guys talked about some advantages and disadvantages, positives and negatives, some concerns heading into 2026 might be affordability. But like Tim just showed, there is definitely still a lot of affordability. So try and stay positive. Rates are great, prices are great, options are great, inventory is great. Watching and waiting, again, to touch on, I wouldn't watch and wait. Rates are not going to drop drastically. And they're also really, we're not expecting them to increase drastically. So we're not expecting a huge boom year. We're expecting a little bit more selection as far as rates go as well. We're seeing clients take shorter terms, like 3-year rates, because those rates have a lot of specials on them instead of the typical 5-year that most people do. So we're just, chatting about different options in fixed versus variable more than we have in the past few years. So overall, big increases, no. Big decreases, no. Word for 2026 should be stability.
Danielle,
But
where do you
that
get your
was
plants from?
I'm
what?
not. I would stop laughing, Danielle.
Hey, I kept a pretty good straight face, I would like to think, during that.
Oh, and Jesse's like, he's
Yeah,
back.
he's back.
Oh,
Yeah,
you
I
guys have
saw
seen that
that.
guy before. Holy smokes.
Nothing like talking interest rates while that's happening. Oh my gosh, I'm sure my face is beet red.
Oh, well, at least we started off the year with
Hopefully that was informative and not too distracting,
Oh, I
but
loved it. I
yes.
don't know how you continue.
Thanks a lot, Danielle.
Yeah. Thanks, guys.
All right, we'll be in touch. Okay, guys, if you're looking for a mortgage, especially investment mortgage, we've been using Danielle for over 20 years. We always say, new JV partner. We always say that, you know what, at the end of the day, Danielle doesn't just get you a mortgage, she gets you a mortgage plan. And that's what it's all about. It's about working with professionals, understanding where you're at, and then helping you move forward. So thanks to Danielle for coming on. We haven't seen Danielle for a little bit because she was in Mexico, and then did she say she was in Mexico twice? She just goes to Mexico all the
Don't
time.
laugh at me. It's a much deserved vacation. I worked my butt off
No,
this.
I know. She's an award-winning mortgage broker, number one in the business. We love it. So we're gonna get started
Okay,
here.
we're going to move on now. Thanks a lot, Danielle.